As a business owner, it is important to know what expenses you can write off to minimize your overall tax burden. In today's video, I'm going to be explaining 14 different business write-offs that are available to Canadian businesses, including home office and vehicle expenses. In the video, I'm also going to share some tips on how to properly document your write-offs. So whether you are a business owner or a self-employed individual, this video will be right for you. Now let's get into it. Hi, my name is Irene and I'm a CPA here in Canada. I post videos explaining important accounting and tax concepts using simple language to help business owners gain financial clarity. Make sure you hit that like and subscribe button for more. According to the CRA, business expense is any cost incurred in the course of generating and earning income from a business. In order to claim a business expense, the expense must be both necessary as well as reasonable within the circumstances. So in other words, the expense must be directly related to revenue generating activities of the business, and it must be an appropriate amount. You are also responsible for retaining the receipts for 6 years, and you're also responsible for providing those to the CRA should they come asking for it. Okay, now let's take a look at some categories of business expenses that can be written off. So the first one is advertising and promotion. This could include paid partnerships, Facebook ads, creating a business card, marketing campaigns, etc. Next one is office expenses. So these are related to maintaining your office. So for example, office supplies, postage, etc. Another business expense that you can write off is professional fees. So these are associated with hiring a professional on your team. So those are lawyer costs, accounting costs, consultant costs, etc. Next is insurance. These costs are related to insuring your business. So for example, professional liability insurance, general liability insurance, etc. So another business expense that you can write off is meals and entertainment, M&E. So it's really important that these are business related. So for example, let's say you treat your staff to a lunch. That can be written off. You take a client out for lunch talking about business matters, that can be written off. And so let's say you were working at your business in the office and you bought lunch for yourself because you didn't prepare lunch previously. That is considered personal and you cannot write that off even though you were eating it at work or at your business. So another business write-off is salary and wages paid to your employees. Please note that you can also write off the fees that you pay to your contractors who helped you do some business work. Next is supplies. So any materials and supplies you need to buy to get your business running. Next is interest. So any interest expense that you pay on a loan or business loan or even like an equipment loan, etc. Another one is rent. So this is rent for the commercial property. So it has to be either like a storefront or your office space that is not inside your house. This is not your house rent. We'll get to that later on in this video. So another business expense that you can write off is for training and education. So this relates to the cost you incur to train and educate your employees and yourself actually. So this could be seminars, workshops, etc. And another expense that can be written off is travel expenses. But please note it has to be business related, okay? So let's say you had to go to a convention that was outside of your city. You flew into a different city specifically for that event that will help you drive business and help you learn the new industry, standards or information. So yeah, that airfare and the accommodations, those could be written off as well too. And another one is capital cost allowance, CCA. This is basically the depreciation on your capital assets like furniture, equipment, and other capital assets used in your business. Okay, now let's talk about business use of home office expenses. This next section is going to be pertaining to the sole proprietors and partners of a partnership. If you have a corporation, there is a slightly different way to navigate this, which unfortunately we won't be covering in today's video. So in order for you to be able to claim home office expenses, you must be able to demonstrate one of the following. One, your place is basically your principal place of business, meaning that this is where you conduct all of your business. Or you can demonstrate that you use this place for business only and you use it on a continuous and ongoing basis to meet with clients, customers, and patients. So assuming you are eligible to claim business use of home office expenses, you will be able to claim the following expenses on a prorated basis. Heat, electricity, rent that you pay for your home, mortgage interest, maintenance, and property taxes if applicable. So please note you're only able to deduct the business portion of all these expenses, okay? So let's say, for example, your home office is 200 square feet, your apartment is 1,000 square feet. Now, based on that, you're only able to deduct 20% of all of the expenses that I just listed above for your home office. So now let's talk about motor vehicle expenses. Again, this section is going to be pertaining to sole proprietors and partners in a partnership. If you have a corporation, the way that this is navigated is a little bit different, which we will not be covering in today's video. So you can deduct expenses you incur to run a motor vehicle as part of your business to generate business income. Assuming you're eligible to claim motor vehicle expenses, you'll be able to claim the following expenses on a prorated basis: fuel, oil, repairs and maintenance, license and registration, insurance. And if you lease your car, you'll be able to deduct the lease payment as well, up to CRA's maximum amount. Recently, there's been a change. So effective January 1st, 2022, the maximum amount is $900 before tax per month. Prior to this date, if you entered the lease in, it will be only $800 per month. So let's say your lease payments were $1,000. You're only able to claim a maximum of $900 per month. So if you purchase the car, you can take depreciation on the car, or capital cost allowance, CCA. If you paid interest on the car because you took out a loan or finance, then yeah, you can write off the interest portion. Please note that you're only able to deduct the business-related portion of your vehicle expenses, okay? So for example, let's say the entire year you drove your car for 75,000 kilometers. Of that 75,000 kilometers, you drove your car only 10,000 kilometers for business. In this scenario here, you will only be able to deduct 13% of your total vehicle expenses because that represents the business use of your car. The other sections are considered personal use. So CRA requires you to keep a mileage logbook, meaning that you will have to track and organize all of your trips that you've driven your car that is related to business. There are different ways to do this. You can do it manually on a spreadsheet, or you can use apps on your phone, like I think it's MileIQ, and QuickBooks Online also has it too for one of the versions, I think. It's really important to have really clear records and logs of all of your business related portion, because that is what CRA is going to be looking for when they come asking you to substantiate your claims. It's also really important to note that you're not allowed to claim personal expenses. So for example, if you're doing a personal errand, that is not considered business, so you can't claim that portion. And then for example, if you're driving from your home to work, so let's say you have an office space, right, where you run your business. From driving from your house to your office space, that is considered personal. That is not business related. However, from your office space and you drive it to your client site, then yeah, that is business related. Although I covered a lot of examples today, I still barely touched the surface, and there's still so many other expenses and scenarios as well as details that I wasn't able to throw into this video. If you have any questions, just leave them down below in the comment section and I'll try and get back to you. The tax laws and regulations are always changing. That's why it's so important to consult with a CPA to make sure that you're filing your tax return in compliance with CRA's requirements, and that you are also staying up to date with the new changes, because your CPA is literally trained in all that tax knowledge and they will help you in guiding you through all of that. In addition, you can also invest in a bookkeeper, or you can just implement really good bookkeeping systems in place, because that section will help you keep your records organized, help you make sure everything is accurate and up to date, and being able to track all of your finances to know what write-offs are missing, etc. So again, there's a lot of information that I couldn't fit into today's video, but again, if you have any questions, please leave them in the comment section below and I'll get back to you. Thank you so much for making your way until the very end of the video. I hope it was helpful. Please make sure to hit that like and subscribe button for more. Over here, YouTube thinks that you're really going to like this video, so I'll meet you there.